Hey guys, good afternoon. So it was an inside day as planned. You can see on the left side that the one is the R-vol, the one period, is well inside the 14 period. And let me get these lines off of here so they're not confusing you. Um, on all the markets, very low volatility, and we tapped out at 5460 SPX. So the YM inside its ones, right? This is the same thing as the Russell, just a nice, relaxing, flat volatility day. Same thing with the NDX, just inside. NQ, same thing, inside. And so put these back. I'll tell you a funny story that happened. I was checking my calculations, like triple checking them on those posts about the SPX options, and I was, thought something was off, and sure enough, I had a typo in there. The short put, this is the long put right here. The short put below it, 4460. I accidentally typed 5460. So it was a typo. And so I generated a post and sent it out, but it turned out to be right? I mean, just luck that the level was right, even though my calc was completely wrong. Big typo. And so the entire model structure off of that was complete crap. And I was like screaming at Chat GPT. I'm like, this is crap. What are you doing? And then I realized it was my typo. And then it dawned on me that it's 1,000 points from the 4460. And holy shit, instead of the complicated, spread or something for OpEx, what they did was they just, sold another short put right there and delta hedged it. So very simple, but very effective. It gave them 1,000 point risk from their 4460. And so they're boxed in. Now, they could delta hedge that. So it's a soft resistance level. It's not as strong as I first thought. They could delta hedge it, 5,500, 5,550. But no doubt they're going to want this to expire 5290. My underlying concept was true. And that, means the most to me. I knew that they would be getting some extra protection. It was the reason for that is it was just too strong of a move Sunday last week. And they would have wanted some extra protection on that. So, do I think we can go back up? Yes, and we will. There's no doubt in my mind. We're going to have a golden opportunity coming up very soon with brand new trading partners. It's going to be um, an excellent time to be long in the market, in my opinion, because um, we're likely to get Russia back in the market for the first time trading with us, trading with the West, and the tariffs like, with the EU are resolving. So they're doing a great job bringing all these companies in. I posted a list on Twitter earlier. There's so much capital coming into the United States. Companies are reshoring. It's not a time to be depressed or scared to be positioned as long. It's just that we need to get through this SPX option position that got upside down on the tariffs. And now that we're getting close to this OPEX period on Thursday, we can go into the Friday holiday realizing that Sunday, when we come back, um, we might see a big lift. Now, granted, people are going to be closing out some equities to pay for their taxes tomorrow, but you would think that that's going to be the worst of it, right? So once we get past that, on the 20th, when Sunday opens, we could really rally hard to the upside. And that's what I'm thinking is going to happen. So we're just going to be, relaxing and skating between here and 5290, 5300, and close somewhere around there. Even though technically the break even, is 5360 with that 50. Um, well, it's whatever the BTIC is. It's the SPX, 5460. So it is the ES equivalent of 5295. That changes every day. And what you want to do is you want to come over here to Yahoo Finance, BTIC ES SPX. That's your Google search. You can see it here. It's the June 20th. Oh, that's the YM. Each one of these markets has its own. So right here, the top one. And now it's back. It's changed again. It's 3465. So what we'll do, oh, and it's 3480. It just moved. Did you see that? It's dynamic. It moves during the day. So 3480 would be the point. So 5460, which is 1,000 points above the 4460. It's not rocket science, right? So they're boxing in 1,000 point risk. So if we go 3460 points above 5460, $54.94.6 to be exact. So there's your new put line. There we go. And right there. See? It went right to it and came back. So yeah, there's our risk line, and they're short below that, no doubt. And they'll probably, like I said, bring it back down to this 5300, 50, close to this 5290 SPX, because they want it to close where they're gonna, have that SPX option, OPEX option, be in the money with the most um, favorable payout, which would actually be, could be a little bit lower. But 5350 or lower, 5350, below 5350, I'm thinking they'll have a better payout structure. But go look at my Substack on that and ran some calcs on that so that you can look at it. But definitely um, keep an eye on the BTIC at 5460, the secondary hedge. Okay, because that's what would be the comparable hedge in the ES. So let's take a look at this morning's original market analysis. I sent one out last night or Sunday, and it gave us some good indications of some trade examples, but nothing quite exactly on it. I had a 5400, 5450 call spread for a breakout to 5450 to 5500, and that worked out pretty good, right? So right here on Sunday, that worked out very well. So that went out Sunday. And then this morning, we did another, let me get back to it. Oh my God, 54.75 to 54.10. Look at that. Look at that. I would say really good. Look at that. Look at that. 54.10 to 54.75. I got the bodies, didn't I? Woohoo! Yeah, we're getting, to the point where I think that you might be pretty happy just getting this report. Yeah, that was pretty good. But a lot of information on options and volatility, dealer positioning, gamma analysis, pending probabilities. Nothing is 100%. Anybody can walk up to a microphone, in today's day and age. But with the overall dealer flow and the options, you can reach your probability analysis and get, a trade plan of, this can happen and then that. Most of us are just scalping around anyway. We don't have the budgets to be, planning for big trades, big market trades. And that to me would be easier because if you're just trading options, you can look at the Jats um, indicator. And if the yellow line is inside the distribution, especially if it's below the blue line, that's below 68% of the daily range, you're going to be selling condors, right? You're going to be selling condors outside the daily twos. And just selling premium on these inside days. When the daily one goes outside the range, that's when, like, right, all of this, look how high it went outside the daily range. That's when you get your range breakdowns. But it's real easy to know whether it's going to be an inside or outside day. Just, taking a quick eyeball look at the monitor, and you can see whether the yellow is inside or outside of the daily distribution. And that is your, fantastic rule of thumb and will help you if you're an inside day. What do you do in low volatility inside days? You sell resistance and you buy support and you trade to the mean. What do you do in a breakout day? You plan your call spreads, your put spreads, or your futures trading strategies and go directionally long or short. But so right here, we had our 5460, which, was the gap open, went right up to it and sold off, and they've held it. And now we know why. It's 1,000 points above their 4460 short call and short put, sorry. And that's their risk line. So could it be a little bit, wiggly if they wanted to move it? They could delta hedge it, yes. But with all that money, in that portfolio, they'd prefer, it just to be a static, you know, line in the sand, which we like better anyway, right? So, so yeah, 5290 for Thursday close, 5300, still on target, but should President Trump get on the, microphone and say, great news, we've worked everything out and we're going to be opening our trading, with all these countries and all these companies, of course the market's going to go crazy. So just be careful. The companies are coming, the money is flowing in, and things are getting worked out despite what you might hear on some of these media channels. I listen to CNBC and I'm wondering, why aren't they supporting the market? There's so much negativity. It's almost like they're stomping their feet and don't want a rally. So I don't understand it. But anyway, that's why I don't listen to that very often. I get angry. But anyway, so we're just, holding inside the dealer flow and trading our levels. The bounce off of this daily three was epic. It was epic. So and then it went to the daily one and turned around and came back. So 30 was the level, and it even went a little bit below 30 and came back up. So the market is trading like it should be. We're inside the daily distribution and everything is working just fine. Good report for today. So that was so hysterical that I got the same result from my earlier incorrect calculation. The result was correct, but the payouts and the calcs were off. So I wanted to be sure and, post a correction to that and be, admit when you get it wrong, just like I like to brag when I get it right. I just had a typo. So I'll have to slow down and check to see that the levels that I'm using to generate my models are, are typed correctly in the future. So sorry about that. I'm so sorry. Anyway, that's hysterical. And as soon as I saw it, I knew immediately. I mean, I was like, holy moly, that's 1,000 points above it. That's what they used. And it turns out I was right. And it turned out that they used a secondary contract. I was right. I was right. I was right. All right, enough. I hope y'all have a great night. Thank you so much. And we'll see you